Buying options is a scam. David Jaffe with BestStockStrategy.com, and in this video I'm going to tell you why buying options is not a legitimate strategy for you to earn consistent profits in the stock market. We all know those fake gurus who tell you that you should buy put options and buy call options. They tell you that you should do this because you're controlling risk, and the maximum amount of money that you can lose is the amount of money that you invest in buying those put and call options. However, when you buy options, it's very similar to buying insurance for speculative purposes. You don't buy car insurance with the hope of profiting from that. The way that we make money and the way that retail traders who are actually successful by selling option premium is we turn ourselves into the insurance company. We turn ourselves into the casino, and we sell option premium when we put the odds in our favor. Again, buying options are like buying lottery tickets. Any fake guru who tells you that you should buy options in order to be successful is someone that you shouldn't just walk away from, you should run from. It is an enormous red flag. Buying options does not require any skill. Anyone who tells you that you have to learn how to read the charts, and I hear a lot of people on YouTube talking about looking at and analyzing 3 chart patterns and buying options and making sure that you use technical analysis and indicators. All of this stuff does not work. And from a mathematical perspective, it doesn't work, because even if you're in a bullish market and you buy a call option, you are handicapping yourself because you're paying premium, and the stock actually has to appreciate more than the current market price of the stock, plus the premium that you paid for it. And additionally, it also has to do that within the time frame prior to the expiration of that contract. Simply put, no pun intended, buying options is a really easy way for you to go broke. And yeah, it's definitely possible for you to make 10 options trades. You can buy 10 options, whether it's calls or puts, and you could potentially turn an account from $2,000 into, I don't know, $20,000. However, the trick or the problem with this is that it gives you a false sense of security, because you believe that something like this is actually consistent. You believe that the success of using this strategy is something that you can replicate over and over. But even if you achieve some type of success in the early going, you are going to lose your money by buying options, because a simple probability. When you buy options, the probability that that trade is going to be successful is only about 20 or 30%, which means that if you take a really small sample size, let's say 5 trades, even if you're successful 20% of the time, it's definitely possible for you to have 3 of those 5 trades be successful. Is it likely? No. But is it possible? Yes, it is. However, the more trades you make with such a low probability of success, the higher the likelihood that your win rate is going to be skewed more towards the expected outcome, which is going to be around 20 or 30% win rate. As a result, you are going to lose money by buying options. Buying options has a very low probability of profit. It is an easy way for you to lose money. So again, anytime you hear gurus tell you that you should buy call options or buy put options, or that you have to learn how to read the chart so that you could time the market and that you can be a price guesser, you should run away from them extremely quickly. In my opinion, the only way that I have seen retail traders make consistent profits in the stock market is by selling option premium. I have worked on Wall Street as an investment banker, and while as an investment banker we don't trade the market, but we understand and we deal with traders all the time. We deal with hedge funds, private equity firms, strategic buyers, and we also learn how successful traders in investment banks trade. And we know that even though a lot of investment banks are market makers, there is a small prop firm inside many of the investment banks, and they use proprietary funds from the investment bank in order to realize a profit. We used to laugh at day traders because we knew that those day traders lost money. The only traders that I have seen on the retail side, which is what you and I are, the only strategy that works is selling option premium. Because when you buy options, the probability of profit is around 20 or 30%. When you sell options, the probability of profit is around 70 or 80%. And the strategy that I have by being extremely patient maximizes your probability of profit to over 90%. So again, buying options is a scam. If anyone tells you that you should buy options or you have to time the entry of you have to read a chart in order to maximize your entry points, or you have to use technical indicators, you should run the other way, because that person is not a successful trader. Stock charts, being able to read charts, is not a statistically valid way for you to be a consistently profitable trader. Again, do not buy options. I have seen a lot of people lose tremendous amounts of money by buying options. Please like this video. That way you'll receive additional videos that I put out. Please comment and subscribe. I respond to everyone. And let me know your thoughts below whether you believe buying options is a valid way to earn consistent profits in the stock market. David Jaffe with BestStockStrategy.com. You can go to BestStockStrategy.com and receive $400 worth of free training information. If you have any questions, leave a comment below, and I appreciate your attention.